We're hearing a lot about the Federal Reserve, or the Fed, in the news. And I thought it would be a good idea to go over what does the Fed do, how does the Fed do it, and how do they affect all of us, and the Fed's recent moves and their reasoning for doing so. So if you want to learn more about the Federal Reserve and how it affects you, keep watching this video. So what does the Fed do? The Federal Reserve is the central bank of the United States of America, and other countries also have their own central banks. Now, the Fed in the United States is mandated to support full employment, try to get as many people working as possible, and also maintain stable prices, managing inflation. And the Fed does this through monetary policy. This is different than fiscal policy. Fiscal policy is set by Congress. Monetary policy is completely controlled by the Federal Reserve. Monetary policy manages the nation's money supply, how much money is moving within the financial and economic system. Monetary policy also gives the Fed the authority to regulate and supervise the banks in the banking system. So how does the Federal Reserve go about actually influencing monetary policy? It does so through the use of the federal funds rate. And this rate, the federal funds rate, is a target interest rate that actually influences the entire economic and financial system. So what does the Fed do? Here are some key takeaways. The Federal Reserve is a central bank of the United States and is one of many central banks around the world. The Fed's job is to support maximum employment and also manage inflation, and it does that through monetary policy. And the Fed does this by setting the federal funds rate, which is the target interest rate that influences and affects the entire financial and economic system. So how does the Fed do its job, and how does it affect us? As financial and economic changes occur, the Fed will set the federal funds rate. This dictates the amount of reserves that banks need to have in their savings. Those reserves are kept on hand to satisfy any sort of requirements and maintain liquidity in the system. The federal funds rate also guides the overnight lending between banks. Banks lend to each other, and the federal funds rate sets the cost at which banks can borrow and lend to each other. So in an economic environment with too much inflation like we're seeing right now, there's too much money chasing too few goods, and prices are rising because of that. In these types of scenarios, the Fed will raise the federal funds rate, and now the cost to borrow money has increased. It makes loans more expensive and has the effect of removing money from the money supply. It takes money out of the system in the hopes that you can cool down an overheating economy. Now, conversely, if it seems like the economy is slowing down or stalling, the Fed can lower the federal funds rate with the aim of increasing the money supply. It reduces the cost to borrow money, meaning that credit is cheaper and thus allowing more money to flow through the system. So in those cases where the economy is slowing down or stalling, this is supposed to help heat up the economy and speed it up. And when we really break it down, the Fed is influencing the banking system, and the banking system is going to be influencing you. The extra costs or savings that banks see when it comes to lending and borrowing money is then passed on to you, the consumer. So right now, as we see interest rates rise, the cost to borrow money for a mortgage or a car loan has now increased for the consumer. So how does the Fed do its job and influence us? Here are the key takeaways. The Fed changes interest rates to influence the money supply depending on economic and market conditions. When the Fed changes interest rates, it either becomes more expensive or cheaper for banks to borrow money. And this extra cost that they incur is then passed on to the consumer like you. So we know what the Fed does, we know how it does it, and how it influences us in the economy. What's going on with all the recent moves that we're seeing? Why is the Fed constantly in the news? As mentioned previously, and as we're all experiencing, inflation is at historic highs, and we've been seeing that coming out of the pandemic. It's because of the pandemic, it's because of the economic shutdowns that we saw economic stimulus be added to the system to keep the economy running. This excess money, among other factors, is a key reason of why we see sky-high prices. So, as we discussed, to combat this, to combat an overheating economy, the Fed is aggressively raising interest rates. They are increasing interest rates or having rate hikes to remove the excess money in the system and to normalize prices and hopefully help bring them down. Now, because of the historic inflation that we're seeing, the rate hikes or increases are happening at a much faster and quicker pace than we've ever seen before. These quick and bigger increases to interest rates are causing a lot of volatility in the market, and that's why we've seen stocks and the markets as a whole across the board down year to date. And that pain is felt across the board, not just in the stock market, but also on Main Street. Now, in the Fed's eyes, they're hoping that this pain is only temporary. The quick increases, the big increases to rates, the big hikes that we're seeing are supposed to remove the excess in the system and hopefully get us back to normal levels. It's not supposed to be something that's permanent going forward. When the Fed sees the indicators that they like to see, their plan is to lower interest rates and bring them back down to a normal level. When that is, we don't know. What a normal level is, we really don't know. I don't know what the right answer is. I don't know if this is how we should be going about it. But what I do know is economies and markets move in cycles. And when things are going badly, eventually they will turn around. In this time of uncertainty, in this time of not understanding what's going on in the economy, I hope this helped shed some light on what the Federal Reserve does and how it actually affects you on Main Street. We live in a very interconnected world, and it's important to understand how these things affect different parts of the world and the economy. Thank you so much for tuning in, and stay tuned. I hope to see you soon.